So does it mean that Tesla is still the rabbit that everybody chases because of their cost advantage, because of the money they save on things like marketing and dealer networks?
Yeah, I think Tesla is still the benchmark here in the EV market. I think, one of their very smart moves that they made early on was to go for pretty much almost full vertical integration, where they can control, they're the master of their own destiny of costs, literally, and a lot of the large amounts of value of the material that goes into their products.
Most Tesla investors and analysts predict that the automaker will become the most profitable car company this year. While this is possible, there is no denying that it won't be so easy for Tesla, considering that more EV models are being released, and many of them could be strong rivals for Tesla. Although most Tesla bulls maintain that the car company is at a stable point in terms of its growth and valuation, some others may argue that Tesla's valuation isn't as astronomical as it seems on the surface. What will be the story for Tesla? Let's look into a few details. Hello everyone, and welcome back to Tesla Tomorrow. Tesla is one of the most recognizable brands not only in the automotive industry but on the planet. The automaker offers the longest range of any EVs on the market, and these cars are also some of the safest in the world. Tesla has become the most profitable American automobile company. In 2022, the EV maker earned $12.6 billion, and its revenue jumped to a whopping $81.5 billion. This indicates that despite significant investments made towards achieving green mobility goals, even by other automakers, Tesla managed to remain consistently profitable, proving that sustainability models can be commercially successful without sacrificing the company's core objectives. Can Tesla survive this increasingly competitive market? Keep watching to find out. Before we start, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Tesla. Last year, Tesla's CEO Elon Musk reassured investors of a promising Q4 for Tesla, adding that the car company is on the path to overtake leading global companies like Apple and Saudi Aramco. Musk stated that Tesla will, in the future, be worth more than both companies combined. According to him, he sees a potential path for Tesla to be worth more than both companies. This was at the time when Apple and Saudi Aramco were the world's two largest companies by market value. Apple was the world's most valuable company, with a market value of $2.34 trillion at that time, and Saudi Aramco, which was benefiting from soaring oil prices, had a market value of $2.1 trillion. The two largest companies in the world were valued at $4.5 trillion. Therefore, Musk was suggesting that Tesla's valuation would reach at least $4.5 trillion in the next few years, although he also admitted that this doesn't mean it will happen soon or that it will be easy. Musk said that he thinks it will be very difficult and require a lot of work, some very creative new products, mass expansion, and luck. Tesla's market cap is now under $600 billion, while Apple is worth $2.63 trillion and oil producer Saudi Aramco is worth $7.62 trillion. While Musk's statement revealed a potential future value for Tesla, it is obvious that the car company needs to do much better to exceed these companies in terms of market cap. Elon Musk predicts Tesla's stock market will rally in the near future. He said this in a Twitter thread responding to a Twitter user who predicts that in 10 years, those who haven't invested in Tesla will have big regrets. According to the Twitter user, 10 years from now, a lot of people may regret not investing in Tesla stock. He added that given the amount of information available today, there's no excuse for an investor to miss out on Tesla. Replying to this, Musk disclosed that now is the time to invest with Tesla, since the stock is trading for a low price. Musk also advised investors to buy when others panic and sell when they're buying irrationally. Tesla has demonstrated an impressive level of profitability in recent years, and the company's potential for future profitability is very promising. As Tesla continues to expand their product offerings with new vehicles, autonomous driving technology, energy storage solutions, and other services, their revenues are likely to continue growing. Starting with just $862 million of profit in 2020, Tesla quickly grew over the next couple of years to make $5.6 billion in 2021 and more than double that by the year 2022. Tesla's revenues have steadily increased over the years. In 2018, Tesla reported revenue of $21.4 billion, an increase from $11.7 billion a year before. The majority of this revenue came from automotive sales, while energy generation and storage, as well as other services, accounted for a smaller percentage of the total sales. The impressive growth in revenues can be attributed to increasing demand for electric vehicles, as well as Tesla's continued investment in product innovation, such as the introduction of new models and major upgrades made by the company to its existing products. In full year 2022, Tesla's operating income more than doubled to $13.7 billion. This number lies above that of pure-play rivals like Lucid and Rivian, who both lose money in their operations. As a profitable company, Tesla has a lot of room to keep prices lower for longer, to maintain and grow its market share. The car company is less dependent on external funding, which creates debt to manage. That's a powerful advantage right now, as financing has become more expensive with the sharp rise in interest rates. As an investor, there are several reasons to stay bullish on Tesla, some of which you already know and have heard a couple of times. One of these reasons is that Tesla's valuation is still very reasonable. Tesla is not a small company, in fact. It's worth more than every other American automaker combined. From a valuation perspective, the stock's forward price-to-earnings, or PE, multiple of 50 is significantly higher than those of traditional rivals like Ford or General Motors, which have PEs of 6.7 and 4.54 respectively, despite large sales volumes and an ambitious transition to EVs. Tesla's relatively good growth expectations further justify its valuation. The automaker expects vehicle deliveries to grow by an average compound annual growth rate, or CAGR, of 50% over the long term, and this could translate to significant revenue and profit growth. In addition, as electric cars become more popular among consumers around the world, and Tesla's brand recognition grows stronger, the demand for their products is only likely to rise. With this combination of increased revenues and brand awareness, Tesla should be able to maintain or even increase its level of profitability in the years ahead. Electric vehicles have established themselves as the future of the automobile industry. GM and Ford and all the other legacy car makers are now investing billions of dollars to manufacture EVs, and the goal is to reduce the gap with Tesla, who is their main target. Tesla already makes more money than other car manufacturers. GM posted net income of $9.9 billion on revenue of $157 billion for the year. Ford was in the red last year, posting a net loss of $2 billion on revenue of $158.1 billion. The margins of the two former giants are thin compared to Tesla's. Their costs are also huge. Ford's total costs rose 15% last year, and GM's rose 24.4%, while Tesla's operating expenses edged up 1.6%. Tesla makes the difference on costs. The company seems to have better control over its costs, which is easy since Tesla spends $0 on marketing, while rivals are flooding consumers with ads touting the merits of their latest models. Tesla is also making more money than General Motors and Ford. A previously article cited Tesla's achievement, noting that the world leader in EVs is taking trophies won by both companies for decades. The article commented that although everyone knows that the path forward is electrification, other than Tesla, it's still difficult to predict which car makers will be the winners. For the longest time, General Motors and Ford have been the kings of this industry. However, that is no longer true. While these companies still sell more vehicles than Tesla and rake in more revenue, they no longer make more in profits. Last year, Tesla earned 8 times as much profit per vehicle as Toyota in the third quarter, despite being outsold more than 7-1. Toyota's profits dropped in the third quarter due to a host of factors, including increased material and electricity costs for its suppliers. While it took Tesla many years to become profitable, it is now one of the best-performing companies in the automotive industry. Although Tesla acknowledged that there's short-term uncertainty about the broader economy, the automaker also disclosed that it's showing no plans of slowing down even as it faces increasingly steep competition from rivals who are investing billions of dollars on an electric future. What are your thoughts about Tesla's growth and performance in the short term? Let us know in the comments section, and don't forget to tell us what your valuation on Tesla is. If you would like to know what Tesla has been up to these past few days, go ahead and click on the next video on your screen. See you there.